Hello, Paul here. Today I'm going to be going over a strategy with SPY, and it's going over my last, if you've seen the last video I made about it, it's going over the same formula, but I want to keep you guys in them. We're going to look at this in different time frames, but today I want to focus on the hour chart and using the same formula that I talked about in the last video and what to look for, and kind of making this video to kind of show you that you don't have to be doing, you don't have to be looking at stocks. I mean, you don't have to put orders in. You don't have to be putting calls and puts in every single day. You can simply look at this on the hour chart, and because it's on the hour chart, it's it won't the signal won't be there every single day, so it will take longer for it to show up. But when you do find it, it should lead to some pretty good numbers, and that's what I want to look at today. We're going to looking at using this strategy on the hour chart and what kind of results that it can bring you. So I'm going to quickly show you guys how to set it up again, and we'll look at this just on the hour chart, and maybe in the next couple days we'll look at this in other time frames, but right now I'll do it on the hour. Now the farther you go out in time frames, the longer you're going to have to wait, so it all depends. If you want to do more intraday, you're going to have to do this on a 15-minute, which I will cover in a later video. But right now, we're just going to look at this formula, and I've already talked about it in a previous video. So we're going to be looking at this on the hour chart. I'll show you how to set it up again and kind of like what to look for in the charts. Okay, so this formula is very easy to find. First thing, you want to go to your hour chart, and you want to set up 4 moving averages here. So for those, you need at least 5. You need at least 5 indicators. So you're going to need an upgraded version of TradingView, and I have it based off of 3 indicators here. I have the S. Well, you can kind of pull it off with 3 indicators. For the free membership. For the free TradingView membership, I think you're allowed 3 indicators. I'll show you how to do it with 3. Actually, no, there's for me it's 3, but for everybody else it won't be, because what I have here is Ghost Market Pro, which was a paid indicator. So for everybody else, it'll take 5 indicators here for the complete setup of what I got here. But anyway, what you need to do is you need to go to CM. CM EMA trend bars, you're going to click that twice, and you're going to be putting in 90 and 95. I have it up here with Ghost Market Pro. That was a paid indicator that I bought a long time ago. It's kind of how I found this formula out. So I use Ghost Market Pro. I'll put the link below if you guys want to get Ghost Market Pro. I've made videos about it, so that's a separate video. But basically I have my 90-95 right here. And then I have the 3, go to here to 3 smooth moving averages, and I go to my inputs, and I put in 20 and 25. Those are the only ones we need. Check off the third one, 20, 25. So it's 20, 25, 90, 95. Those are the moving average. It's very important that your 90, 95 is more thick. If you do it with CM trend bars, it's good to have it color-coded, because it's going to show you if anything's bullish or not. And those are the very important indicators that you need. You can also plug in recommended, like an additional one like RSI. Have RSI on there as well. But whatever extra indicator you want to put on there. But for the sake of this video, we're just going to be looking. The other indicator that you have needs to be just an indicator to where you can confirm and kind of show where to get out of your trades. But basically, I'm going to show you how to use SPY with this formula. Now, the formula is real easy, and I'm going to show you how to do this with, how to do this without looking at your charts every single day. This is a very part-time job when you do it like this. I still find myself looking at charts every day with this. but that's just me. But you don't have to enter your trades every single day when you're looking at it on the hour. The whole point of this is you want to wait for your 20, your 25, your 90, and your 95. They have to cross. So we're going to look at those points and when they happen and how much you potentially can make when they do cross. So right here we're going to look at, now there's other videos and I could show you other scenarios that wouldn't get in. I think I'll mention that too, because you have to wait a while on the hour here. But let's just look real quickly here. And I'm going to make a line every time they cross, and we're going to go back and we're going to see how much we potentially would have made in that trade. So I'm going to draw a little vertical line on a couple of them. We see a crossing here. Let's do two more. We got one right here. And then we have another one that's not crossing. And it crosses right here. So if you focus on all these moments where it crosses, I'm going to turn the candles back on. We're going to look at these numbers and see. You enter your trade at the cross of the 20, the 25, the 90, and the 95. Let's turn the candles back on. So basically, let's look at this first one. So it crossed right here. If you entered your trade right at the cross, which probably would be, let's stretch this out. So the first cross is at around, right around here, would have been at 582. And if you just rode this out for a little while, now if you rode this out for 5 days, here's 5 days right here. So from the moment of cross, we got a $17 difference in price with one contract. That's about $1,735. The cross happened on around November 6th, and you could have got out at that point. That would be your first take profit, or you could have just kept riding it out, but you would have had to have a very long contract to continue on. But let's just see how much you would have made. It was right about here. If you wrote it out to all the way up here, you would have made about a $26 difference in price. So in 30 days, you would have made $2,693. So that was on around November 6th. So let's real quickly look at it when it goes down. It's the same thing. Now with the strategy, you do kind of want to go with the trend, and you go look at, if you look at longer time frames, and you'll know what direction it's going. This right here is against the trend, so that's why it's not going to be a big, powerful move. You'll notice all the uptrend moves are bigger moves, and the downtrend ones aren't, because it's going against the trend. But we'll check this one anyway. If you came in right here, this is going against the trend, and you would have made about $738 in 4 days. That was on October 31st, and that was going against the trend. So let's check the next one. The next time it crossed was right here. So the last one was on Halloween, and then we got another cross right here, which is on September 13th. So go here, and we'll do this one again. We'll ride this one out. We'll look at, so if you enter right about here, this is when it crossed. We rode that out all the way up here, and you see right about here, and then all the way up here to the top right here. This is 7 days. You would have made $1,684 in 7 days. If you wrote it out longer, you would have had a $20 difference in price. In 14 days, you would have made about $1,924 with one contract. If you wrote it out even longer, for 32 days, you would have made $2,962 with that. So by waiting on the hour, now the trend is going up. Now there are pullbacks, and you'll notice that. So you'll notice all the uptrends are bigger moves, because that is is the direction that it's going. Now here's another against the trend. This one was very brief, and this one happened on September 6th. So we'll check this one out real quick. This is going against the trend. So if you came in right here and you rode this one down, right about here, you would have made about $852 going against the trend. So then we got our next one right here. So across right about, this is going with the trend. So across right about here. And this is about August 15th here. So if we rode this one out from here to the top, right up here. This took 6 days. It was about $1,764. So around there. So that was on about August 15th. Let's check the next one. Now this is a downtrend. This next move was on, cross happened right about July 24th. So if you came in right about here and rode this down, this was a good against the trend. Or maybe there was a bigger pullback, but this was about 11 days and you made about $2,910 with one contract. So do I have any more? Did I have any? Yeah, here we go. I think I have a couple more we'll look at. So this next cross happened at, let's see, this happened at May 3rd. So if you came in right here and rode this out all the way up here to the top, or till right about here, this is a $20 difference in price. In 12 days, you made about $2,000. 16 days, yeah, so about $2,000 right there. So that was on, yeah, that's about May 3rd. See if we'll have another one. I think that might be it. So you guys get the general idea. You basically wait for the, now this is just on the hour chart, but you wait for the 20, the 25, the 90, and the 95. And it has to cross completely to enter the trade. There's been many close calls to where it looks like it's going to cross and then it does the opposite. So the main job here is basically to look at the chart with these moving averages and, figure out when it's going to cross. So just basically keep your eye on the cross on the hour, and when they cross, that's when you enter the trade. Now, you have to understand what direction it's going overall. And, if it's going against the trend, odds are that it's not going to be a big move. If you look at the day chart, which I'm not going to show you, the whole point of this video is to see everything on the hour. But you have to get a good idea of what the overall direction is doing, and the direction's up. So if it's crossing down, that usually means it's just going against the trend, and it's probably not going to be a big move. I would personally wait for all the moves where it crosses up, because that's going with the trend. But anyway, that's looking at this on the hour. You don't have to look at this every second of every day. You just have to find all the moments where they cross, and you always have to go with the direction. So anyway, I personally like doing this on the hour. It keeps everything not as stressful. The main disadvantage to this strategy is you have to wait for it to cross, and it's not going to happen every day. You might find this once a week maybe, but when you do find it and it is going with the trend, it usually, as we saw on the charts, lead into some pretty good results. You could do the strategy on the hour, and you can go down. You can go, if I go down, it's the 15-minute, but I'll make a video on that. And you can also do this on the day, and I'll probably make, I want to show the strategy on the 15-minute, and I want to show it on even a longer time frame. I want to show it on maybe the 6-hour or the day. We'll look at it on the day. I think that'll be in the next video. But anyway, the hour is the one to where kind of in between, and the only disadvantage here is you have to wait for the cross. And the cross has to go with the trend to make the most out of it. But anyway, if you guys like this video, make sure to hit the like button, hit the subscribe button. See you guys in future videos.